Imagine unlocking the secrets of a potential gold mine, the world of cryptocurrency. This realm of digital assets, teeming with opportunities, is no longer reserved for the financial wizards. Understanding cryptocurrency charts, the roadmap to this treasure trove, is a skill anyone can master. It's the compass that guides investors, new and seasoned alike, through the volatile waves of crypto investments. It's the key to unlocking the endless potential of this digital gold mine. So, are you ready to dive into the sea of cryptocurrency charts? Cryptocurrency charts, they might seem complex, but in reality, they're just a graphical representation of price movements over time. Let's start by breaking down the basics of these charts. Every chart you see is made up of various time frames. These frames can range from 1 minute to 1 month. Each frame represents the opening, closing, high, and low prices of a cryptocurrency within that specific period. Hence, by observing these frames, you can track price trends over different intervals. Now, have you ever noticed those little bars that look like candles on the chart? Those are called candlestick patterns. Each candlestick is packed with information. The body of the candle shows the opening and closing prices, while the wick or shadow indicates the high and low prices during that period. Green or white candlesticks mean the price increased during that period, while red or black ones indicate a decrease. Next up, we have volume bars. These are usually found at the bottom of the chart, and they depict the number of shares or contracts traded in a security or market during a given period. High volume often means there's significant interest or activity in a coin, while low volume suggests the opposite. Understanding these elements, time frames, candlestick patterns, and volume bars, is crucial for interpreting the price trends of cryptocurrencies. The more you get familiar with them, the better you'll be at spotting potential investment opportunities. Now that you've got a grasp on the basics, let's move on to the next level. Analyzing a cryptocurrency chart is like solving a puzzle, where each piece contributes to the bigger picture. It's not as daunting as it may seem at first glance, and with a little patience, you'll see how these pieces fit together to give you a clear image of the cryptocurrency market. First off, let's talk about trends. A trend is the general direction that the price of a cryptocurrency is moving. It's like the current of a river. It can flow upwards, downwards, or sideways. Identifying the trend is a vital first step in chart analysis, as it gives you a sense of the market sentiment and can help guide your investment decisions. Next, we have support and resistance levels. These are price points where the cryptocurrency has historically struggled to fall below or rise above. Think of these levels as floors and ceilings. A support level acts as a floor, preventing the price from falling further, while a resistance level acts as a ceiling, preventing the price from rising further. Understanding these levels can help you anticipate potential price reversals. And then there are price patterns. These are specific patterns formed by the price movements on the chart, and they can give you clues about what might happen next. Some common patterns include the head and shoulders, the double top, and the cup and handle. Each of these patterns tells a different story about the market dynamics, and recognizing them can give you a significant edge. But here's the thing. While these tools can be incredibly useful, they are not foolproof. They are simply pieces of the puzzle. And sometimes, the puzzle can be complex and unpredictable. That's why it's crucial to use them in conjunction with other information, like news events or market indicators. Remember, analyzing charts is a skill, and like any skill, it takes time and practice to master. But with persistence and a keen eye for detail, you'll soon be able to read cryptocurrency charts like a pro, making informed decisions that could potentially lead to profitable investments. So, you've made it this far and are on your way to becoming a crypto chart expert. Let's quickly recap what we've learned. Cryptocurrency charts are your treasure maps in the digital gold mine, providing you with valuable insights into market trends and price movements. Understanding timeframes is crucial. Shorter timeframes can show you the immediate market sentiment, while longer ones reveal larger trends. The candlestick patterns give you a visual representation of the market's mood swings. Volume bars, on the other hand, show the strength of these moods. Trends help you understand the general direction of the market, and support and resistance levels show where prices could potentially bounce back or break through. Remember, price patterns are the bread and butter of technical analysis, helping to predict future price movements. Keep practicing, stay curious, and you'll soon be navigating the crypto charts like a pro. Don't forget to like, share, and subscribe for more crypto insights. Until next time, happy trading.